Okay, welcome everyone. Thanks for joining. I'm Andrew Grinsell, the Head of Wealth here at Cooee Wealth Partners. Today, what we're going to do is we're going to take a look at how investments are managed through Cooee Wealth Partners. Have a look at what's changing as we launch the Cooee Portfolio Series on the Hub24 platform and what that means for you. We'll also cover off a bit around our investment philosophy, how the portfolios are built and governed, and what sort of communication you can expect along the way. If you have any questions, please feel free to drop them into the chat or into the Q&A section as we go through, and we'll cover them off at the end. All right. Before we jump in, just a quick note that everything today is general information only. Nothing here should be taken as personal advice. Your individual circumstances will impact what is right for you. So please reach out to your wealth partner for that personal financial advice. Alrighty, so just to sort of set the scene for what we will be covering off today, we're going to touch on how Cooee and Evidentia manage investments, who Evidentia are, our investment philosophy and process, the benefits of moving from the managed account structure that we have with Dash to the separately managed accounts, or SMAs, with Hub24, and also, quite importantly, how this enhances transparency, governance, and overall client outcomes. All right, so before we get into the details of the new Cooee Portfolio Series, it's probably worth taking a moment just to talk about how we approach investing at Cooee Wealth Partners. So firstly, we follow a clear, disciplined framework that's built on evidence, structure, and governance rather than gut feel or noise. Every portfolio we manage goes through the same repeatable process: research, review, accountability. Now, our role is to take the complexity out of investing. It's to apply consistent decision making so that you don't have to react to every market movement. And later in this session, we'll revisit this framework that's illustrated on this slide in more detail so that you can see exactly how it works inside the new Cooee Portfolio Series that we're launching on Hub24. All right. So with the Cooee Portfolio Series that's going to go live from 29 October, these portfolios represent the next evolution in how we manage your investment. So what it does is it brings greater transparency, expertise, consistency, and governance to everything we do. Now, the Cooee Investment Committee oversees the design and ongoing management of the Cooee Portfolio Series. What it does is it combines the expertise of Cooee Wealth Partners, where we focus on aligning the strategies with our client goals, alongside Evidentia Group, who's our independent research partner, who provide institutional grade analysis, asset allocation modeling, and manager research. So together, by bringing these two groups together, what it does is it ensures that every portfolio is professionally managed, professionally constructed, independently reviewed, continually monitored. So that way our clients have got confidence knowing that there's a strong governance and research framework behind every investment decision. All right, so I've mentioned Evidentia a few times. It's probably worthwhile now just touching on, well, who are they and where do they fit into the picture? So Evidentia Group is an Australian investment research and consulting firm that manages around about $25 billion in partnership with leading financial advice or private wealth firms. They've got a team of 30 investment professionals across Sydney, Melbourne, Brisbane, and Perth that provide research depth and data analytics that help support the Cooee Investment Committee's decisions. So Evidentia does not deal with clients directly. What they do and where they fit in is that they enhance the investment capability of Cooee Wealth Partners by supplying us with independent market research, manager analysis, and dynamic asset allocation insights. Now, Cooee Wealth Partners still remains responsible for how that research is applied to help you meet your individual goals. All right, so the Cooee model portfolios, or the Cooee SMA portfolios, which will be known as the Cooee portfolio series, is built on the same investment philosophy that has guided Cooee Wealth Partners for many years now. However, it's now going to be delivered through a stronger and more transparent structure via the Hub24 platform. So there's some key principles behind every decision that we make, and I just want to take a moment to unpack each of them with you, because they're what give confidence that the new approach is, it's not experimental. There is a disciplined structure behind it. Firstly, it's evidence over emotion. So every portfolio decision is based on data and research. It's not on hunches or headlines or the mood of the markets. Evidentia's analytics gives us greater insight into valuations at the company level and at the asset class level, earnings trends, global conditions. And then what that does is it allows us to act on evidence rather than speculation. It means that the portfolios aren't chasing yesterday's winners or reacting to fear. They're built to stand the test of time. Secondly, valuation matters. So it's not just what you invest in, it's what you pay for it. So when markets are expensive, what that means is that future returns can be expected to be low. However, when markets are cheaper, then the prospect of future returns improves. So we need to have that valuation awareness to shape the adjustments that we make with portfolios, helping us buy more of what's attractively priced and avoid paying for enthusiasm. We see a lot of people talking about, you love a particular investment idea. People are talking about gold right now because it's gone on a great run. But the issue that we end up facing is that it ignores the price you're paying. Right? So are we getting value getting in at the current price? So we can't just go and follow the latest hot trend if it's already expensive. All right. Third point is that, look, diversification is a genuine and real risk management tool. So when we think about diversification for us, it means blending together assets that are going to behave differently. And that's shares, property, bonds, and infrastructure. But then we're also going to blend different investment styles. So you can have fund managers that have got a different approach to the way that they look at things. You can have those that are looking at growth, those that are looking at value, those who are looking at quality, and maybe some that are focused purely on income. Now, the other thing with diversification is the aim isn't to avoid losses altogether. That's just not possible with portfolio construction. There will be times when markets go through a correction. But what we aim to do is make sure that no singular event or market dominates the outcomes of the portfolio. All right. We then have a look at transparency and simplicity. So with the use of the Hub24 platform, which is going to be our preferred platform moving forward for our actively managed portfolios, and also the only place that we can access the Cooee portfolio series, clients are able to see every holding, every transaction, and the performance of every asset in one place. That gives a lot of clarity. It removes any mystery that there might be around how your money is invested and replaces it with a good level of understanding and control. We also need to be mindful of fees and taxes. So performance before fees is irrelevant if costs and taxes end up eating away at that gain. So we do focus relentlessly on what clients actually keep. And that's why with Evidentia, we're also able to negotiate institutional pricing and use efficient index options where appropriate. We're also paying attention to turnover. So how much is a particular fund manager buying and selling stock and triggering CGT implications, but also how often we're making changes and the CGT implications that might come with that. And then also being mindful of franking credits as well, especially on the, for the Aussie equity component to that. So when I talk about institutional pricing in our funds, when they're in the Cooee portfolio series, some of the fund managers like in the fixed income space might ordinarily charge, say, 0.55% per annum as their management fee. But with Evidentia, because of their size, that $25 billion of assets under management, they've been able to negotiate improved pricing. So clients are getting 0.2 to 0.3% per annum back. So that's bringing that total effective fee cost from 0.55 down to maybe 0.35 to 0.25%, so a lot lower cost because of that ability to negotiate due to their size. And last but not least, we've got discipline throughout market cycles. So markets are going to rise, they're going to fall, they're going to recover. Our job is to help you stay invested through those cycles. The portfolio series is designed to withstand volatility, so you don't have to go and react to every headline. And it's that discipline that turns into good, successful, long-term investment outcomes. So we've got these 6 principles on the screen here. And when we go and combine these principles, so data-driven decisions, valuation discipline, broad diversification, full transparency, cost control, and emotional discipline, that's when you get a process that's calm, consistent, and repeatable. And that sits behind all of the portfolios within the Cooee portfolio series. All right, so earlier I mentioned the discipline framework that we use to manage investments at Cooee. So I just want to revisit that now because this is where you'll see how the Cooee portfolio series brings that process to life. So first of all, we look at long-term design. So each portfolio in the series starts with a carefully constructed mix of shares, property, bonds, and the Evidentia research brings those long-term weightings and forward-looking return risk assumptions in, and our investment committee then needs to formally approve anything before it's implemented. What we probably need to just jump back a step and have a look at is it all starts with your strategy. So how much money should you have invested in the markets? How much money should you be paying off your home loan? Getting that part right, and then going, okay, well, from what is invested, what are our investment objectives? How long have we got to invest? What is our investment? So our investment time frame, how much risk can you take, and what return do you need to receive? We then move on to your strategic asset allocation, and that's basically saying, well, what do we need to do, or what mix of investments do we ordinarily need to achieve those outcomes around how long have you got to invest, what risk can you take, and what return do you need? Over the top of that, we then apply dynamic asset allocation. So from time to time, there will be times where we see equities might be expensive, they might be cheap, so we'll make some tweaks along the way to better manage risk and return. Once we know the asset classes in which we want to invest, we go down to the level of going, well, how do we want to get that exposure? So if we've decided that we want in the growth portfolio, 28% in Australian shares, we've then got to look at, okay, well, how do we want to get that exposure to Australian shares? Do we just go and grab something like the A200 beta shares ETF that gives us exposure to the top 200 companies based on their size in the Australian market at 0.07% per annum? Or do we want to go about it a different way where maybe we want someone that's actively picking stocks around the small cap side of the market? So once we've got that part right, that then goes to the investment committee to review and approve those changes. So that's the combination of Evidentia and Cooee Wealth Partners. And then from there, we have the ongoing review and monitoring of the portfolio and performance. And then, of course, as clients' goals change over time, we've got to just complete that cycle and keep moving through it. All right, so just going to touch on that strategic advice part again. So really just to recap, when we're talking about, the mix of shares or anything like that, we've got to go back a step and talk about strategic advice. So that's what you need your money to do for you and by when, and then we'll work through 4 key things. So your goals and timeframes, what are you funding? Is it school fees, a home upgrade, retirement income, leaving a legacy? And when do you need that cash? So that clarifies the investment objective and their time horizon. We need to be mindful of things like cash flow, liquidity, and tax settings. So we need to know what sort of income does the portfolio have to produce for you, the client, and over what sort of frequency. Do we need monthly income or quarterly? We need to know what sort of buffers are sensible in that and what entities are involved. Are we investing through personal, super, family, trust? So that then that way we can be aware of after tax, after fee outcomes. Now, some clients are going to have some constraints and preferences, and I'm talking about like ESG tilts, so concentration limits, holding restrictions if you work for a company that you're not allowed to have stock in, or any product exclusion. Some people might say, I don't want any alcohol, tobacco, gaming, mining, whatever it might be. We can set guardrails to make sure that we don't fall into those investments that we need to eliminate. We've also then got to be focused on risk alignment, so bringing together the risk that you need to take to meet your goals, the risk that you can financially withstand, and the risk that you're comfortable with taking. So collectively, those three elements of risk determine your risk profile and help us determine which of the Cooee portfolio series you best fit in. And once they're clear, we've then locked in your investment objectives around risk, return, and income targets. And only then can we select the appropriate investment to align to your needs. And of course, the Cooee investment committee needs to approve those as well. So in short, for us, it's strategic advice first, portfolio advice second. Now, I just touched on this on the previous slide, but it just puts it up in a visual for you. So bringing together the three elements of risk. The goal isn't to eliminate risk, it's just to take the right amount of risk that you need, right? So as I said, we need to look at risk required. That's how much risk do you need to take to reach your goal. So someone aiming for strong long-term growth might need more exposure to growth assets. Risk capacity is how much risk can you afford to take based on your financial position, time horizon, and ability to be able to recover from a market fall. And then we've got that risk tolerance element as well, which is how much risk you're comfortable taking emotionally. Some people sleep soundly through market volatilities. Other people prefer a smooth ride, even if it means lower returns. So we bring these together to work out your risk profile, and that then helps us determine which of the Cooee portfolio series you should be in. Should that be the short-term fund, the moderate, the balance, the growth, or the long-term fund? Now, there's no right or wrong answer here, and some clients need a blend of the three, because you might look at it for somebody in pension phase and say, well, over the next 3 years, I need to withdraw $150,000. So we might go and put $150,000 in a short-term fund that's got very low returns, but extremely low levels of risk. Then we might go and say, well, 4 to 7 years from now, we need to access another 200,000. So we need to put that in a moderate portfolio because the time horizon is appropriate for that. Then whatever's left over, we don't have to touch for 8 years. So we might put it in a long-term bucket where we can be comfortable going, well, if the market corrects, if we have a fall, that's okay because we don't need to touch it for 8 or 9 years or more. So yeah, basically that's something that each wealth partner in our business needs to be able to work through with each client to figure out what the most appropriate outcome is. All right, so when we move then onto the portfolio construction, we need to look at, well, what drives investment returns? Now, research shows that over 90% of investment returns are driven by how your portfolio is allocated between growth and defensive assets. It's not by actually trying to pick stock or time the market. So that's your strategic asset allocation, or SAA. And that's really the central anchor for your portfolio. Now, the right mix depends on those items that we spoke about, the time frame, the income needs, and the risk tolerance. Of course, the growth assets like shares and property, they are there to deliver higher returns over time, but come with more short-term movement, while the defensive assets such as bonds and cash give us that stability and income. Now, our job with the support of Evidentia Group's research is to set that balance carefully for each risk profile and ensure that it stays aligned through different market cycles. So just in short, getting the structure right matters far more than chasing short-term opportunities or trying to stock pick. All right, now one of the key things with the portfolio series is its diversification. It's not just across asset classes, but then we also have it across sectors and investment managers. We spread the investments across different asset classes, which is at the center of that hub there. So that's your shares, your bonds, your property, and alternatives, so that the performance doesn't rely on any one particular area of the market. Then within each asset class, we then diversify by sector. So that's across different industries. So for example, in Australia, we might be diversified across banks and financials, resources, materials, consumer discretionary, telecoms, IT. and then also regional diversification as well. Then finally, we diversify by manager. So we blend together index funds to keep the costs low with fund managers that have got proven track records of being active specialists. So that layer of diversification really helps us manage overall risks while keeping you positioned to capture returns wherever they are occurring. Now, beyond the long-term mix, we also do make these small value-driven adjustments over time. So if there's an area of the market that looks overpriced, we'll trim it a little. If something looks underpriced, we'll add. Now, these are measured tilts. They're designed to improve the portfolio's overall risk and return without substantially changing its long-term strategy. So we review this at least quarterly, where Evidentia will present research on valuations, earnings, interest rates, and risk, among other items. And then our investment committee reviews the data and decide whether a modest shift is warranted. So recently, Monday this week, we slightly reduced our Australian share exposure and increased the emerging markets exposure, basically because the value is far more compelling. So it's small moves, clear rationale, and it's documented governance around that. So moving on from that, look, every Cooee portfolio is built using a carefully selected combination of investments that meet strict quality, cost, and consistency standards. We start with a research universe that's curated by Evidentia. There's 3,972 total managers in the Australian market, so a lot to choose from. But fortunately, Evidentia Group actually owns a business called Lonsec, which is what Australia's most trusted and highly rated research provider for products. So with Evidentia Private's in-house product research and then the Lonsec institutional research, that gives us some very deep coverage of fund managers, ETFs, and the different asset classes. So ensuring every investment that we do consider has been through an independent evidence-based review. Now, from that foundation, the Cooee Investment Committee can choose which investment managers and funds make the cut for the portfolio series. And in doing that, we will blend together some low-cost index options for broad market efficiency. We'll use proven active managers where they do have genuine skill that can add value after their fees and after tax. And we'll blend together multiple investment styles such as value, quality, and growth to help smooth out the performance of the portfolios through market cycles. Now, each holding is selected for its role in that portfolio, and it's continually monitored by Evidentia Private, Lonsec, and Cooee Wealth Partners to make sure it continues to earn its place in the portfolio. So the result is that we get a portfolio built on institutional grade research and independent ratings. It's managed locally with accountability and transparency through Hub24. Look, in addition to that, Hub24 do also screen the investments before they'll add them to their platform. Recently, there's been some highly publicised failings with some funds called First Guardian and Shield Master Trusts. For context, those investments never actually made their way onto the Hub24 platform because they didn't meet the due diligence requirements that were raised by Hub. Moving on from there, once a change has been approved by the investment committee, it's rolled out through Hub24 to all investors in that portfolio at the same time. So that means there's no paperwork, there's no lag for clients, it's simultaneous execution for everyone, and there's a full audit trail of what changed and why. Now, Hub24, based on our trading setup, keep the portfolios in line with their targets. Where the weightings to different investments drift over time, the system will rebalance to back to the approved portfolio settings. Investors or our clients can log in at any time, see their holdings, see the transactions, see the performance, so you're never left wondering what's going on behind the scenes. In addition to that, we keep a structured communication program to keep clients informed and confident of how their money's being managed. So we'll produce quarterly asset allocation reviews that summarise the investment committee's latest thinking, where we're seeing markets look over or undervalued and how that's influencing our current position. We send out short monthly market updates that are client-friendly, giving clients sort of insights and keeping across what's going on recent market movements. We've then also got market event updates. So if something significant happens, such as a major policy shift or a market correction, we'll send out ad hoc updates to clients. And in addition to that, Evidentia produce a document called Evidentia Insights. It's a periodical piece that covers educational content from Evidentia, helping you understand what's going on with the markets and different trends. And we'll send those out via email. So the idea behind this is simple. We're not there to overwhelm clients, but we want to make sure clients are informed of what's going on. You'll know what's changed, why it's changed, and how that aligns with your long-term strategy. All right, now, a couple of quick things here. So markets do move in cycles, and so do our emotions. This chart shows a pattern that repeats over decades. As markets rise, optimism turns to excitement. Then people, there's a bit of euphoria around that. Now, that's usually the point of maximum financial risk, and it's also when people start to get most excited about different investments. When markets then fall, we end up with fear and panic that takes over, and that's often the point of maximum financial opportunity. So the hardest part of investing isn't the mathematics behind it. It's actually managing our reactions when things are feeling extreme. And that's where our process and communication are designed to make a real difference. So through the Cooee portfolio series, we're here to help you stay disciplined. Our portfolios are structured to ride through these cycles rather than chase them. The quarterly reviews and ongoing oversight keep us focused on valuations, not emotions. And our regular updates just help you understand what's happening so you can stay invested with confidence, even if the headlines might be a little bit unsettling. All right, so I just want to summarise what we've covered. Basically, the Cooee portfolio series, they run as a managed account structure on Hub24, providing transparency. You can see every investment, every transaction, and performance update in one place. There's no black boxes. There's consistency and fairness with it. So when the investment committee approves a change, it's applied to every investor at the same time. There's also speed and simplicity. So there's no paperwork from clients for making changes to the portfolios. They're implemented efficiently and quickly. And also we've got that discipline of making sure the target weights are maintained and portfolios are rebalanced back to their settings so that we don't end up drifting and falling into the wrong risk category. And then we've got that communication piece around what's changed, why, and how it affects your portfolio. All right, so as we sort of mentioned, we've got that enhanced investment thinking and resources by having Evidentia on board. We've got that seamless integration of portfolio changes. We've got strong risk governance and oversight. You've got transparency as clients. We're aiming to be cost effective where we can, and we've got strong reporting capabilities of that. Now, this is superior to a traditional advice approach where a lot of advisors don't use managed accounts. Instead, what happens is the financial advisor is making the decisions rather than a formal high quality investment committee with professional asset consultants, which is what we use. So the column on the right is us, the column on the left is most others. Implementation happens generally in the advice industry, happens on a client by client basis, which means there's a bit of a lag between the decisions being made to make changes and clients getting it. Whereas with us, it's quick, it's seamless, it happens. Some will have retail pricing, we'll get institutional pricing. Some will require you to sign a record of advice or an SOA every time a change is made. With us, once the investment committee agrees to the changes, it'll happen straight away. Look, transparency can be variable across different things. Now, I'm not going to go through every one of the Evidentia investment team. I think the key point here is just to make you aware that it's quite a substantial team covering asset consulting, portfolio analytics, economics, and fund researchers across different levels in the hierarchy of the business, but collectively that gives us great depth of data, modelling, and government expertise. And it's important to note that whilst Evidentia supplies the research and helps us with the recommendations, we retain full responsibility for aligning these portfolios with our clients' needs via the investment committee. And we can sort of see there, obviously, you've got an executive director, there's a chief investment officer at Evidentia, a head of management research, you've got asset consulting general manager, we've got direct equity, head of direct equities, we've got senior asset consultants, head of strategy, head of senior analysts there. The list goes on. So the main thing is it's a big team, it's an experienced team. They're now working alongside us. That gives us more depth and resources and some pretty good client outcomes. So hopefully that's been beneficial for everyone who's attended today. If you have any questions, please feel to reach out to your wealth partner and we'd be happy to help. But otherwise, enjoy the rest of your day. Cheers. Bye.